divorce cases?
I think for all attorneys, one of the most difficult things is the emotional overlay is
Okay.
that particularly if the process starts immediately after or right at about the time of separation, or sometimes even right before a separation, there's often a lot of emotion involved, and it's very difficult for people to make good decisions.
Okay.
Part of the concept of having an attorney and other professionals is to help people try and make good decisions, rational decisions, and when people are very emotional, they don't always make good decisions. So I think it can be hard for the attorney, particularly when they see somebody making, or at least wanting to make bad decisions that they may not recognize are not in their long-term interest. In terms of the actual paperwork and the process, one of the things I find difficulty is getting your own clients to do some of the paperwork that they're required to do in the process. Since the 90s, I believe it was 1993, the state legislature passed a body of law concerning the parties' responsibilities to make disclosures to each other, okay, which requires written disclosures, and at a minimum it requires what's called a preliminary disclosure statement, which would include a schedule showing your assets and debts and identifying any separate property claims that you intend to make with respect to assets and debts, and another form called an income and expense declaration, where you require, just like it says, your income and your expenses. And in some cases, these documents are a lot of work. They're certainly very important, and the law requires full disclosure. The law says full and immediate disclosure of all material facts and information concerning assets, debts, and characterization of those assets and debts, as well as income. And this is an ongoing obligation to continue to update and notify the other side of any changes. And a lot of people are busy, yes, with life and trying to deal with their dissolution and still go to work and raise their children, and it can be a real burden. So I find a lot of times, months after these things should be done, neither side has done them, and the court and the lawyers are pushing people to fulfill the obligations because the sanctions for not doing it can be severe.
Wow. Okay. What are some issues related to the family residence?
There are a lot of issues related to family residence, and you can imagine it's often the largest asset in a lot of families, and so it is an asset that perhaps is one of the assets most commonly fought about in a dissolution of marriage. People tend to think that just automatically the family residence somehow is split in half, and either it's sold and you divide the money, or the person who keeps it pays the other half the value. But what we see is often, particularly folks that have been married before or get married later in life, they're often separate property claims, and so there's a dispute about the characterization. Is the house community property? Is it separate property? Is it some of each? And the law can be complicated. There can be issues about improvements to property, and is someone acquiring a right in the other person's separate residence as a result of contributions. Back in 1984, the law recognized that we didn't have a very good remedy in dealing with separate property contributions toward family residences. And the old law used to say if there was an agreement or understanding between the parties, the courts would enforce it. And I think what we found is it was difficult for people to prove agreements or understanding, so those who contributed their separate property to community property residence, property titled as community property or joint tenancy, often were denied a claim. So this statutory remedy went into effect in 1984 that says if you contribute separate property to the acquisition of community property, you're entitled to reimbursement at the time of dissolution of marriage, which normally you're talking about either a down payment to buy a house that's taken as community property. So if you had money from before marriage or a gift from your own family or an inheritance, some source of separate property. You make the down payment, you later get a divorce. Even though the house may be community property, you would be entitled to reimbursement for that down payment. This is a subject of a lot of litigation because often the question is, first, can someone establish that they actually use separate property?
Right.
And there are disagreements if the money came from, common disagreement is the money comes from one person's parents. Was it a gift? Was it a gift to husband and wife, or was it only a gift to their son or daughter? And the other area where you see these claims is if someone has a separate property residence, that's their sole and separate property, and during the marriage they refinance. And certainly here in California, we've seen many refinances over my 30-year career. It seems like there's these changes in the economy where interest rates will drop down, or the housing market's going crazy, and there'll be all sorts of financing and refinancing. And as a condition of refinancing, often a spouse ends up on the title to the other party's separate property as a result of the refinancing, which means the property is now community property. To make it more complex is what happens when you have multiple refinancings or you purchase multiple homes during the marriage. And now you can imagine we've had this law since 1984. We see people that may have been through 3 or 4 or 5 homes with multiple refinances, multiple rounds of improvements to homes, and it can get very complicated.
Right. Headache. Okay. Are there any differences in how community property is treated for a divorce compared to a death situation?
Well, the area of the law I was just talking about, the reimbursement for separate property contributions toward the acquisition of community property, and that's Family Code Section 2640, is only applicable in a dissolution of marriage and not in the probate court on death of a party. So that's an important distinction.
Right.
And these are things, of course, most people have no clue. They don't think about it when they're refinancing or buying a home, and they don't know what the consequences are often until many years later.
Right. Okay. So one of the things that we talk about is transmutation, you know, of separate property to community property and so forth. So I think there was even a recent ruling where the person was saying, well, we just did this for estate planning purposes, and then the judge said, well, we're sorry, but it either is or it isn't.
That's right. That's true. Transmutations is another area where there's a lot of litigation in divorce cases. Because a transmutation is when you change the character of separate property to community or community property to separate property. Transmutations are not always deliberate, and transmutations, if you want a clear, unequivocal transmutation, you need a writing, certainly in the area of real property, or not all property, but most property is going to require a writing for a transmutation. And then the question is, will the transmutation be enforceable? A lot of times people change title deliberately during the marriage, only to find out at the time of dissolution of marriage the other party claims it wasn't voluntary. And the law looks with a critical eye at transmutations during the marriage that advantage one spouse. We have what we call fiduciary duties, a very high duty of care between spouses during the marriage and even after the marriage until all the property is divided and awarded and distributed. We've had a series of cases where apparent transmutations were set aside. The law says that there is a presumption of undue influence in a transaction where one spouse is advantaged over the other. And so that could be, we changed the title